How do you push yourself to invest when the market goes higher and higher? In the short term, I recently learned of proper investing and realized I have not been investing enough. I've decided to step up my investing this next month and have a chunk to invest. Looking at the chart of the SP, it seems to have gone up in a straight line the last month. Do you see any reason to not dump in the extra funds now? How do you push yourself to invest at these levels? Sorry, I can't find the numbers now, but I read that something like 90 of the time the market is within something like 5 of all-time highs. So most days you will be investing at or near highs. There's another thing that if you miss the 10 best days in the market every year for 20 years, your portfolio will be 50 smaller. So unless you really know that one of those 10 best days isn't coming and that isn't predictable, you should continue investing as planned. Are investing in 2022? How do you push yourself to invest when the market does nothing but eat shit every single day? Are investing in 2023? How do you push yourself to invest when the market is going up? You're thinking about timing the market up most of the time. Time in the market, timing the market. Because no matter where it is, it will probably be higher in 30 years. I had 30K sitting around for 2 years before I finally decided that this week was the week to invest it. Everything went up 5 the day before. Oh well, I'll get M next time. Just keep buying, I guess. Because the exact same pattern has appeared like every year for 100 years at least. That's just what stocks do in the short term. They go up and down. No one can time the market, so don't try. Just keep dumping money in. Sometimes you'll win, sometimes you'll lose. But you should still average out 10 growth per year. Don't lose 5% trying to lock in 2 DCA into good companies with solid fundamentals, or if that's too much risk, then DCA into SP. Do an auto invest weekly or monthly and just let it ride. The easiest way to stay motivated to keep buying is to look at a chart of the entire market and pull back so that you can see longer time periods. You can see that what looked expensive at one time looked cheap years later. And the variations up a couple hundred points, down a couple hundred points start to look insignificant. I'm 31 and my retirement time horizon is at least 20 years away. I'm confident that the market will continue higher based off of simple economic principles. If that direction changes for the worse, the money I've invested probably won't be of any help to me otherwise. I dollar cost average into several index funds for the same amount every single month without fail. Set and forget is the best policy for most investors. Fortunately, the market is still below its 2021 peak, so just zoom out a little and realize it's been higher before. While I agree with not timing the market, don't let this thread FOMO you into rushing into an investment before you are ready. Yes, you need to get that money to work, but take the time to research companies first. DCAing into some over-leveraged zombie company. Because Reddit said to DCA into stocks because they'll always come back is a nightmare I could see. A new FOMO investor making. I invest so that I have a reason to go to work. If I keep my bank account small, I feel poor and I always need money to invest with. The saying buy low sell high is wrong. It's actually buy high sell higher. The market has gone straight up since its inception. Cash has a nearly 100 negative return over the long run. Don't invest it all at once, invest it over many months. Each week or month put 1x of it in. I think of it like this: when the market is up, my money is growing. When the market is down, I'm buying more shares at a discount. I'm always winning. Just because the market has been going higher doesn't mean all stocks are higher at a stocks. have seasonal ups and have to learn to read the markets for the seasonal adjustments and try to profit on the upswings. Cash is a position. Buffet doesn't deploy all of his cash. Set limit orders at support levels and be happy if they get filled. Zoom out. You'll find that sometimes it goes up for a decade. You don't know whether this is one of those times. Plus, if your timeline is a decade, well, look at prices any time a decade ago. It makes a difference when you invest. But unless you can predict the future, that's not actionable. You really have to state what your investing time frame is to get a meaningful answer, because that's what determines your strategy. When the market is up, this feels like the worst time. It's at the peak. When the market is down, guys, I feel like I should ride out this downturn. I'm scared of losing more if it keeps dropping. OP will never win by trying to time the market. Investing and wealth building is a decades-long process. Set it and forget it. You don't bother with timing. Also, you don't just buy the S&P. You buy the relatively lower valued international stocks as well. In which case you apply the same don't bother with timing mentality when observing the long running underperformance of such stocks. You could try to take a risk on small cap value if you believe that asset class has been underpriced for the past decade. Otherwise, it's index and carry on as usual. And invest heavily into the things that make you inherently valuable to the market. Personally, I invest in the safer, more stable and established companies when the market has a large run-up. Like this. They don't rise or fall as much. So if this is a rally that suddenly loses steam and plummets off a cliff, then you'll be mostly fine. The above works as long as you're selling out of your more stable picks during downturns to buy growth at the bottom. Growth and tech fall harder, but then rocket back up faster and farther. That's just one way to approach it. Do whatever you want, but I personally never stay in cash and get left behind if it's a sustained rally that never drops. Apple. I do crypto instead of stocks, but the logic should be same. Going into communities helped me on decisions. Latest one was Spool, and after checking their fundamentals, just going into their Discord was enough to convince me. You never know where it goes day to day. I just keep putting it in the 401k and a few funds and forget about it. Simple. Just always be investing every week of the year. It's not that hard, it's really just active saving and moving money to make money, but keeping your mind in the game daily. Investing your time is just as important to understanding the grind. It's really easy when the market is going up. It gets hard when the market is going down. Find an amount that you're comfortable auto-investing every week or month and just set it, forget it. DCA into specific companies or ETFs with a long-term investing thesis in mind. DCA into broad market ETFs into my 401k every paycheck. For my IRA, I usually just max it out at once in a year. Usually around April for the previous year. That's nothing. Investing during the market crash is way more scarier. The way I always did it was think long term and keep in mind historical market behavior of trending upward over the long haul. I can't think of a better way to put it. I look at a chart of the SP 500 over the last 30 years. It's not about timing the market, it's about time in the market. DCA in 10 a month, or even 25 a month. Yes, I hate buying at these peak levels too, but in the long run it won't really matter. I recently learned of proper investing. Your response doesn't seem like you have. You are talking about last month and thinking about changing your strategy based on last month's trend? Wow, it looks like I could make money in that over time. Why would you be looking at people making money in the market and not want to be one of them?